don't know how many quarters we keep saying this, but once again, Charlotte was one among the nation's top performing apartment markets in the first quarter of 2012 with better than expected revenue growth. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Charlotte update. Charlotte outperformed the national averages for growth in both occupancy and in rents in the Q1 of 2012. Occupancy climbed 30 basis points and same-store rents jumped 1.7%, and that brought quarterly revenue growth to 2%, nearly double the U.S. average. And that's the third time in 4 quarters that Charlotte has reached at least 2% quarterly revenue growth. And as a result, for the year ending Q1 2012, Charlotte ranked among the nation's most elite with year-over-year revenue growth of 8.6%. And as you can see from this chart here, that is Charlotte's biggest year-over-year jump in revenues since all the way back to Q1 1999. And here's a summary of the key current stats. Occupancy is now at 94.1%, up 220 basis points year over year, and rents jumped 6.4% annually, the biggest hike seen here in 13 years, and it ranks as the 8th largest nationally. And we've told you this before, but what makes Charlotte's ascent particularly impressive is it's added tons of new supply over the past few years. At the same time, it's not added any jobs. In fact, posted net job loss over that time period, according to data from the Bureau of Labor Statistics, if you believe them. And let's take a look at a chart showing annual supply and demand over the past 5 years. Since the start of 2008, around the time the recession started, Charlotte added 13,839 new apartment units. That amounts to inventory growth of 12% over that time period. Across the country, only Austin saw a bigger inventory growth rate since 2008. But over that time period, according to the BLS, Charlotte lost about 42,000 jobs on net. So how has Charlotte been able to absorb nearly 11,500 units while losing jobs since that time frame? Well, there's a few reasons. Number one, Charlotte remains a hot spot for recent college graduates, and like what we've seen nationally, as hiring has kicked up again, a lot of those jobs are going to 20-somethings in positions that had been filled by older workers prior to the downturn. Number two, Charlotte has done remarkably well in recovering white-collar jobs. In fact, there are more finance and business service jobs today in Charlotte than there were even prior to the recession, which is remarkable for a city that's largely still known as a bank town. And the problem in Charlotte has actually been more blue-collar, working-class jobs like construction and manufacturing. Those were the jobs hit hardest during the downturn, and they have been the slowest to recover. And we see that trend reflected in the apartment data, where the more blue-collar submarkets still have weaker occupancy rates. And number three, perhaps most importantly, population growth. A recent report came out showing that Charlotte led the nation in population growth between 2000 and 2010. And since 2007, population growth in Charlotte has been 3 to 4 times the national average, about 200,000 more people, or 12% growth since 2007. But apparently they're coming without jobs since net job change is negative, or perhaps those job numbers are underreported. So how long could Charlotte keep posting these impressive revenue growth numbers? Well, we are expecting another year of strong revenue growth. Longer term, we should see revenue growth levels slow down a good bit as new construction in apartments picks up again, and also we start to see the single-family home market heat up as well. But long-term, Charlotte's apartment market should remain pretty healthy. The long-term outlook is certainly positive given the long-term trends in demographics and in population. And that wraps us up for Charlotte. So until next time, for Apartment Market Dynamics at MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.